Are we live? I think I've gone live. Can anyone hear me?
Yes.
Okay. Okay.
Can just go to the following slide. Sandra? Mandla, can you hear anything? For some reason, we can't hear the video, Sandra.
There's no sound.
Okay. Sandra, let me just try and play from my screen.
Yoli,
Please allow me to play from my screen, please.
you can't hear me?
No, we can't hear anything. So let me do the slides. Okay, awesome.
time in South Africa, a live performance mid-flight at 30,000 feet. To kick off this groundbreaking innovation is 27-year-old Divine Mahara. This is also the former Zimbabwe's Got Talent winner's first ride on a plane ever.
Life is a journey. We are all traveling. Kure kwanda kabai koi, here I have been traveling. Life is a journey. We are still traveling. Kure kwandi koi, we are all still traveling. Kanango mayorira natso terera voda izira ngome natso pembera ubenye udukudu kumwanawe break a leg my friend kanango mayorira natso terera kanango mayorira natso terera voda izira ngome natso pembera ubenye udukudu kumwanawe break a leg, my friend. Can I go mayorita? Not so terera. Life is a journey. Yeah, we are all traveling. Here I have been traveling. Oh, life is a journey. We are still traveling. Yeah, we're all still traveling. Kanango mayorira natso terera iwe. Voda izira ngome natso pembera iwe. Upenye udo kudu kumwanawe. Break a leg, my friend. Kanango mayorira natso terera iwe. Kanango mayorira natso terera iwe. Voda izira ngome natso pembera. Upenye udo kudu kumwanawe. Break a leg, my friend. Kanango mayorira natso terera iwe. I have been traveling. We're still all traveling. Yes, I have been traveling, 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 traveling.
Hi, my name is Charles Oj. I'm the CEO of HYBER, a Pan-African innovation enterprise focused on delivering impact in Africa. And I'm really excited to be here, and also really excited about my colleagues that are joining hands with me to on this journey. My colleagues in Lagos, Nigeria, in Kenya, in East Africa, in Johannesburg, and also in Cape Town, and even outside the continent in London and Paris and the Netherlands. I would love to, talk to us about our purpose here in HYBER, and we're really very excited about using innovation to scale positive impact that brings real and lasting change for the African ecosystem. And as we look at Africa and seeing so many opportunities, we do see lots of challenges. These challenges are difficult, they are intractable, and our intent is to say, how do we bring prosperity for all? And you may ask, how can we do this? And we do this in three ways, which we call our innovation missions around circular economy, inclusion, and also sustainable lives. Let me just take some time now and just talk about each of them. I mean, with the big theme around climate change, circular economy is something that we really push and drive here at HIBA. And it's really about accelerating Africa's transition towards adopting circular principles and actions which are relocalized, regenerative, and restorative by design. The next mission we look at is inclusion. And here we're really talking about not leaving anybody behind as Africa evolves into the development phase that it should do. And our mission here is to create opportunities that enable inclusive African societies for the benefit of many, especially women and youth. Sustainable life is really around improving the quality of life, whether it be education, whether it be health, whether it be helping for all Africans, wherever they may be. In bringing these missions to life, HIBA is offering diverse but integrated services. These services are consolidated into three big buckets. The first one is we show up as a venture builder, where we work with scale-ups and small businesses to really scale their impact on the continent. Our second role or service is as an innovation partner. And here we work with larger organizations like multinationals, governments, academia, investors, or even development agencies to see how we can co-create solutions that can then be scaled up in the marketplace. Our third service is, looking at being a systems enabler, where we solve, very complex and sophisticated problems in the market, whether it be unemployment or even poverty. How do we collectively bring our resources and capabilities and design using innovation and, if possible, ventures to really transmit solutions and impact for the continent? So we're really excited about our work at HIBA, and we're looking forward to partnering with you and talking with you as we transmit impact on the continent using innovation. Thank you.
Last night we touched the skies. A blend of mushrooms, I could feel it in my head. My ribs I had seen, we've been laughing all night. Drank till the last glass because
Good afternoon, everybody. Welcome to this HIBA event as part of our celebration of Women's Month. In South Africa, we take August as the Women's Month when we commemorate the Sharpeville massacre, pretty much. But we know when Sharpeville happened, it was mainly led by women, and there were a lot of women who were killed on that particular day. So we take the month of August to remember what those women started as a movement in terms of speaking up as women for the rights of everybody. But we also take the month of August to celebrate women in general across the country and highlight some of the things that affect women and impact women. And from a HIBA perspective, we obviously look at it from an entrepreneurial perspective and try and help female entrepreneurs. And this year's theme is future-proofing women for change. So we live in a very dynamic world and things have been changing, right? We're talking fourth industrial revolution, and we as HIBA playing our part in trying to help women entrepreneurs future-proof themselves and their business. Thank you very much for joining me on this particular topic, talking about investor readiness. Let me just share my video, my slides with you. So, share screen. Right. I trust everybody can see my screen. Talking investment readiness. I don't know if you've been part of the other talks that have happened in the morning. Unfortunately, I couldn't make the one that happened just prior to this one, but I managed to join Zoya earlier on in the morning at 9 o'clock. I would highly recommend you to be, to get that recording. I think we're going to pass out YouTube links, some sort of recording of that session. It links very well into what we'll be talking about this afternoon in terms of investment readiness. She was talking about communication and having your voice be heard. And obviously that's like the softer part of it, how to say what you want to say. In this session here, we'll be talking about what to say, if we can put it that way, to simplify it, right? So the objective here is to try and help you understand what investors are looking at, what they look for when they start talking to you, or when you start engaging them as you are trying to do any capital raising or look for external funding from third parties. In fact, one person put it very succinctly to me, or put it in a very nice analogy, which I thought was quite good. And they were saying that, investment readiness, if you think about it as somebody coming to buy your house, and they'll probably come with 2 million, 3 million, and you rebuff them. At some point, they'll come with a very good price, call it 20 million. And at that point, what you do not want to do is say, come back in 6 months' time because I still need to repaint it. I want to repair this. I want to fix that. They won't come back and you lose the opportunity. But if you were able to actually, at the moment the opportunity presents itself to you, you bring them in, sit down, have a cup of coffee or tea, what paper can we sign to get this conversation moving forward? You want to try and lock them in as quickly as possible because you've seen that this is quite a good opportunity. And investor readiness is pretty much like that. It's all about being ready for the opportunity when it presents itself. A lot of the time you have to go out there looking for investors to come in. But once they are interested in you, you need to make sure that your paperwork and all the things that investors look for are pretty much in order, right? You can look up in any, if you do a Google search for DD, due diligence checklist, you'll be able to pull up quite a lot of things there. But really and truly, when investors are doing a due diligence process, and which is what you're really trying to prepare yourself for, is you want to make sure that when the due diligence comes up, you don't fall short, right? From an investor perspective, why are they doing the due diligence? They're doing the due diligence because they're trying to look for reasons why they shouldn't invest in your business. So the fact that you've gotten as far as a due diligence process means that the investor is interested. So you don't want to then lose the opportunity because you're not well prepared, right? And when they're doing that DD, they'll look at financial aspects of your business, they'll look at the legal aspects, operational aspects, and they'll look at the tax, right? So you want to make sure if it's financial, you've got your books up to date, you've got your tax clearance, your legal, if it's, employee contracts, supplier contracts, purchase order, you've got all those things nicely wrapped up so that when somebody comes to take a look, they're comfortable with what they are taking, what they are going to be investing in. What investor readiness is also about is that you are trying to actually, it's like a risk management, right? You are doing the risk management on behalf of the investor, which is why you want to be able to then look at things from a investor perspective. So look at your business from investor perspective. But before I go into that, due diligence is not just one-sided. You also need to be doing due diligence on the prospective investor, right? So before you even embark on fundraising, you want to be able to come up with a list of who are the right investors for you. What are you looking for in your investors? What do you need from them? And particularly if you're at a startup stage, it's not just the money, right? You need connections, you need their network, you need their expertise. So all those things form part of what is the perfect investor for you. And then once you've sort of found them, you also want to do a DD on them, right? Things like how long do they tend to invest for? What do they want in terms of when it's exit time? What networks do they bring? What's their experience or the experience of other investee companies that they've invested in? And how do they manage the company that they've invested in? What is that, communication process like? So you want to be able to ascertain those things as well to establish that these are the right investor for you. Certain things that you need to note though is that, readiness is round specific to begin with, right? So if you're going to go and ask money from your friends and family, the information that they'll require from you is different from the information that a potential Series A investor is going to ask from you, right? Timing is everything. So fundraising is time consuming, and therefore you need to give yourself time to actually prepare. If you're going to do a rushed job of it, you will actually bungle the whole process, even though you may have a very good story to tell. If you don't give yourself enough time, then again, the likelihood of you being ready when it comes to due diligence will also mean that you'll end up tripping over there. You need enough time to position your strengths and the best way to tackle your weaknesses, right? This is, again, when you're doing your investment readiness, you're really looking at what are our strengths and how do we leverage that? How do we highlight them and sell them to the market? And what are our weaknesses and how do we actually show the market that we are risk managing for these weaknesses, right? And then also, once you've done all the work in terms of investment readiness, it doesn't really guarantee you that you will succeed in your fundraising. But what the whole process is for is you want to try and get to yes, right? And there are probably two combinations that will help you there. One is obviously talking to the right investors, and we've spoken about what you need to be able to put together in terms of what is the right investor, right? Come up with some sort of checklist in terms of what you need from your investor, and therefore, who are you supposed to be talking to? Understand on the other side what the investor's mandates are, right? If the mandates match, if you go and you talk to a private equity investor or venture capitalist whose minimum check size is 15 million and you're asking for 3 million rand, then obviously there you are not talking to the right person, because they cannot write a check less than 10 million, no matter how much they like you or no matter how much your story is compelling. So you need to also do a lot of homework around who is the right investor to be able to increase your probability of success. But the other thing is you need a strong proposition, right? A strong proposition is really around the story around the business, and how you present that business to the market. Okay. And as I mentioned earlier on, that you want to be able to look at your business from an investor perspective. So when you want to start trying, or when you consider going to raise money from external parties, think about how are they going to look at you? What are the things that they will mark you on? And then start working on those things, right? Start making sure that those things, you don't give them an excuse to say no, or make it difficult for them to actually say no to you by working on those, on that criteria. So you really are here, the investment readiness process is really about doing a gap analysis of your business and then being able to then market your business thereafter. So how do you become investment ready? First and foremost, focus on your story, right? And again, if you can get Zoya's recording, I think it will be very helpful because she talks about storytelling and why storytelling is important and how people assimilate information better if it's through a story than facts, right? So focus on your story. Why are you looking at this particular opportunity? What was the experience? And therefore, what was the aha moment? And also, as you're telling your story, you're able to bring out the insights that you have around the market, right? So you're there to try and prove that there is a market. If you've got data, bring out that data. If you haven't got you haven't launched a prototype yet, but your business is still at an idea stage. But if you've got information around the market that you want to go into, show that information, show the potential investors that you've got insights and that the business idea itself is not being driven on a whim, but is actually being driven by insight that you have. So again, this is what we're talking about here. So this list here of 8 things that we've got here, these are things that you want to do before you even start talking to investors, right? Remember we said you want the investment readiness process is about you looking at the business from an investor perspective. So again, when you're ticking those, ticking those boxes, you're asking yourself the questions, how do I then prove that there's a market when I'm talking to the investor? Okay, are my financial records accurate? Are they up to date? If there isn't, you need to work on that, which is why, again, you need to give yourself the right amount of time. Okay, so it's normally recommended between 9 to 12 months before you actually want to go out to the market and sell yourself. You take the time to start working internally through some of these things to make sure that by the time you hit the market, you're confident, you know your story very well, and you know that all the documentation that you need is up to date. Your team, again, as you're going through this process, it gives you a chance to assess who your team is. Are there any weak points? And perhaps when you are doing the fundraising, what you're thinking about is we need 2 million rand to cover a salesperson for a year, because that's what we need, or we need 2 million rands because we need certain types of hardware, right? Which talks about where the money fits in. So have a clear and concise plan around what you're going to use the money for. Because if you don't have that clear and concise plan, again, and you start fumbling and people ask you how much money do you need and you're not too sure what the costs are and what, then you will actually throw people off and you won't be able to, no matter how good the idea may be, you may not be able to then get the investment that you're looking for. And then also take the time to work out a valuation for your business and be able to understand the things that support that valuation, that strengthen the case for the valuation, and perhaps maybe the things that work against that valuation. So what are the points that investors are likely to bring up to try and knock that valuation down. And how do you then defend that valuation? But it's very important for you to go out there with a firm number, not to say, well, look, I think my company is worth around about 2 or 3 million, because, you know, again, people want certainty and people want you to be confident in terms of how you present yourself, right? And if you're not confident around your valuation, it means you haven't really given much thought to it. And therefore, again, when it comes to them giving you money, they want to be certain in terms of what percent are they getting of your company and for what value, right? And then again, talking about, you know, where shareholders fit in. We mentioned about the right investor and what you're looking for from them, right? What expertise are you expecting them to bring? What networks are you expecting them to bring? Are they a strategic partner? Are they going to be a small silent minority? Will they get board seats, you know, board representation? You want to be able to think about those things before you hit, you know, the market, before you start having these conversations, so that when the questions come up, you're not trying to think on the spot, but you've actually been able to, you know, you've thought about them, and therefore the answers easily roll off your tongue. Right, so some of the things that influence success, you have at seed stage, it's really about people, right? Seed stage, what has happened there, I mean, what is happening there is pretty much a lot of it is you've got this idea, you could be testing it out, but the most of it is you don't have much revenues, right? You don't have much of a financial track record, and because of that, you will need, as the entrepreneur, you need to be able to sell yourself to the potential investors for them to have confidence in who you are. If you're late seed to early venture stage, then there it's now about, okay, you've got this idea, sounds very good, but does the market really want this product, or are you just a solution that's looking for a problem, right? Are you a vitamin or are you a painkiller, right? So are you something that the market has been waiting for and really wants? So is there that product market fit, or are you just, you know, trying it out and you're struggling to get that traction within the market? And then at growth stage, it's all about commercial momentum. Yes, you've proved the concept, you showing some sort of revenue, but is there growth, right? Because now what you're doing is when you're looking for funding at that particular point in time, it's because you're saying to the investors, look, my product is flying off the shelf and I need to be able to make sure I can supply the market and make sure that I can meet the demand that's there. Are there any comments, questions at this point in time? Okay. So the biggest factor when it comes to success, when you're doing your fundraising, it comes down to you. And the first impression that you make to any potential investor is pretty much the impression they'll have of you throughout your interactions and your engagements, right? So they've got that blink evaluation where that very first, they say that you've only got, you only have one chance to make a first impression. And that first impression has to be is very important, because that's when people subconsciously decide on what they think you are capable of doing or not capable of doing. So whatever you then say after that, it's either going to add to the credibility that they're giving you, or actually going to take away even further from what they think you are. Some of the reasons why investors will say no to a potential investment, or when you come out to the market, So again, this is now some of the things that you want to try and pad yourself, try and prepare yourself for, so that again, when the issue comes up, you've got an answer for it and you're able to deal with those questions when they arise. So the first one could be the opportunity is not big enough. So you need to be able to show that you're going to be, particularly if you're talking to a venture capitalist, right, that's looking for a 10x, 100x, 1000x, you want to be able to show them that the opportunity is big enough. And sometimes you want to be able to say, look, your idea, although it may be South Africa focused or whatever country you're in focused at the beginning, it has the potential to be able to be exported into bigger markets, to other markets, to create that growth that you're looking at. Sometimes they may say, look, you're too early to the market. Again, here, what they're afraid of doing is having to keep pumping more and more money before the market starts supporting or providing the cash that you need to keep growing, right? This would also be related to another point that we'll talk about later on, about your idea perhaps being a bit, being capital intensive, needing too much cash to actually realize its full potential, right? If you think about the stages of a company, if you're like early stage, it probably takes you about 2 to 3 years to really gain traction, to really prove up your concept. And then after that, you've got about another 4 years where you're starting to see, product market fit. You're starting to see that traction within the market, and things are a lot easier when it comes to selling the product. So just getting to that point would be like a good 7 years. And the investor is thinking to themselves, what am I doing in those 7 years? Can this person actually continue to deliver on what they're talking about over these 7 years? And those are the things that become very critical, as well as your ability to execute. If they think that perhaps maybe, you've got no competitive differentiator, what is your key selling point? You need to be able to communicate that, and communicate that well, right? If it's something that somebody can easily copy, if it's an idea that, particularly if you've got big players in the market already, players that can easily replicate what you're doing, then, the VC or the potential investor may turn you down on that. If there's unfavorable, macroeconomic conditions, so if the economy is not doing so well, again, anything that requires a lot of growth or supported by, high economic growth, something that may not be an essential service or an essential product, when growth is actually, we're in a recession, you'll find that investors will tend to be very hesitant to put money into, or perhaps maybe the regulations are changing. There was a time, 2016, 2017, when people were launching these tokens, right? The crypto tokens, and it was very easy to raise money at that particular point in time. But as the market got a little more savvy, got to understand what this crypto is all about, it's become less and less easy for crypto companies to actually raise money. So you'll find that the sizes of the raises that have actually been coming through the market have become smaller and smaller. From the millions, you actually now see that they've become, to the thousands, 150,000, 200,000, that sort of thing. Sometimes some of the reasons why they would say no could be founder or team related. And here you've got, if they sense negative dynamics within the team, they may shy away from actually putting money into the company, because again, the last thing that I want is to put money into a business and then the team decides to fight amongst themselves, and then the company actually has to then get liquidated, and then they lose the investment. Another thing could be missing a key person, right? If you don't have a particular strength within your team. So remember earlier on, we spoke about being able to look at your team, assess your strength and your weaknesses from a team perspective, and be able to maybe build in adding on that extra team member that you need if you need an extra team member, or perhaps being able to understand where your weaknesses are. If you think you've got a full team, where your weaknesses are and how then are you working around those weaknesses as a team. You know, if you are doing too many things, too many things all at the same time, the investor may shy away because of that lack of focus. They may not be too happy with the fact that, look, you are trying to sell bread and fish and, but as a small business as well, one can understand if you're bootstrapping, you'll try and do as many things as you can to try and get the cash. But what they want to see is at least some sort of focus on the idea that you're presenting to them. So it becomes very important in terms of how you present all this other extra income that you're generating to try and support the idea that you actually have. And then if there are any behavioral, personality red flags like dishonesty, maybe some arrogance, rudeness, those things are off-putting when it comes to investors. The other thing that would cause a potential investor to say no could be, it's capital intensive. It requires too much money just to get it off the ground. So you have to think about things that you're trying to do and how do you rationalize the capital, or how do you rationalize the money that you need for you to get the business off the ground. Perhaps when you're doing your MVP, you can scale it down. If you've got 10 features in this product, maybe you want to start with a product that's got 3 features. And then as you gain traction, add the other features along the way, right? The size of the transaction could be too big or too small, depending on where you are. It's, I gave the example of, earlier on, that if you've got a VC that writes only minimum size check of 10 million, but you're asking for 3, they'll obviously say no. So again, there, the question is, do your homework around who is the potential investor that you're looking for, and do they have the, do the stars align when it comes to the mandate that they have and the ask that you have. If it's too early, again, investors have their sweet spots. Others may say, look, we would look for a company that's got at least revenues of 2 million rands a year. Others will say, look, we'll look at something that's got, an operating profit of 15 million rands a year. So again, it's also about understanding the potential investor's mandate versus what you are going to be presenting to them for you to avoid getting a no in this instance, right? The other thing, which is not necessarily in your control, would be that they fail to convince their investment committee, right? And those reasons could be, look, maybe you compete or you provide competition to a company they've already invested in. Maybe again, as IC, they've seen somebody else try the similar idea and they failed at it. So they don't want to, associate with something like that, or they'd rather see it being proven first before they can get in. There are various reasons why an IC would say no to a particular investment, right? But that's not something that you can really convince. You can really change. What you need to make sure is if you do all your work and you do it well, and you come to a point where it's not, it's not anything to do with what you have done or what you have said, but it's an IC issue, then maybe, you can carry on or move away from that, knowing that you did your best there. Sometimes it's fundraising related. So when they say no, it could be because of your valuation. Again, your valuation could be too high, right? Entrepreneurs make the mistake of thinking or expecting that when they're going out to raise money, they need to go with a very high valuation. But what you're doing, if you go with a valuation that's not supported by your fundamentals, is you're setting up yourself for failure in the next round, right? And nobody wants to invest at a company where it's valued at 10 million today, and then tomorrow when they raise again, it'll be valued at 5 million, right? Because that means that the first set of investors have lost money. You want to be able, again, which is why I said earlier on that you want to really think about the things that support your valuation and be able to defend them when you have to defend them, so that they, any potential investor has the confidence in what you're saying and can be comfortable in the fact that, okay, there's an unlikelihood of a down round when you go for the next round. Yeah. But also at the same time, if you value your company too low, it could also just reflect badly on you. You know, you may think, well, look, I'm trying to be cheap here because I'm trying to get as much investment dollars as I can. But if you value your company too low, what will happen is that you actually dilute yourself too much too soon, right? And as an investor, particularly angel investors, VC investors, we want to be able to see an entrepreneur or want to see them remain motivated through the stake that they hold, right? So if you're going to be at seed as an entrepreneur, going to be diluted to 5% of the company, already some of the motivation that led you to start that company is gone, because now you're not really working for yourself. You'll feel like you're working for all these other third parties, and that can become a demotivator. So getting that, valuation right is very, very important. Sometimes you can, be declined because of your cap table. If it's not up to date, if perhaps maybe there may be conflicts of interest within, between one potential investor versus another potential investor for one reason or the other, that could also lead to a no. So again, it's also very important to work through some of that secretarial stuff, getting some legal help to make sure that your cap table is right, all the agreements that you've done. Particularly now we've got this the advent of safe agreements, which are basically agreements that allow an investor to put money in without them taking, or without you having to establish a value for the business, right? And it will only be valued at the next capital raise, and therefore, that investor then determines the percent shareholding that they have just prior to the second raise, right? It's called Simple Agreement for Future Equity, SAFE. Right? What happens with safes is if you hand out a lot of safes and come the next capital raising exercise, and then now you have to go back and rework all those safes, and people have claims on shareholding that you didn't expect, but then any other potential investor, when they're coming in, they think they can get a big stake, they end up getting a much smaller stake. They may not like that. So they always want to make sure that your cap table is neat, everything around it is tidied up, so that when the next raise happens, it's a much simpler process. It's a simple process, right? Sometimes they may tell you that you need to find a lead investor. Here, they may like your idea, maybe not have a good, may not have strong conviction around it. So what they would want to do is see if there are other, reputable investors that would find your idea as interesting as they do. So they may not want to be the ones to take the lead. And normally what happens with the lead investor as well is that the lead investor sets the tone in terms of the investment terms that everybody else comes in with, right? So they would rather, some investors would rather follow more reputable investors into a round than be the ones that lead them. And then cold calling, if you just take your presentation and send it to them without any sort of customization or personalization, they may not really take to your approach. And if that is the case, you're basically just setting yourself up for failure. So it's also very important to understand, what does the investor like? How do you approach them? And if you can avoid a cold call and try and see if perhaps you can get some sort of intro to any potential investor, that always works better than just a cold call. And then lastly here, we'll talk about the business model, right? So they may not appreciate or understand or like, to a certain extent, the business model that you're presenting to them. So again, the numbers, right? When they look through the numbers, they want to see traction. If they don't see that traction, it may not give them the confidence to put money into the business. if they think that what you're doing is not scalable, they may not invest. And really scalable, yes, we're talking about, are you able to grow revenues without having an equal or larger impact on your cost line, right? So if you are generating 10 million sales with 5 people, can those same 5 people generate 20 million rands in sales? That's what they want to be able to see. But if for you to double your sales, you need to double your costs, then there's no growth, because what they're looking at is, at the end of the day, how much do the profits and how do they maximize that return on investment? So if they think that it's not scalable, they certainly will not be too keen to invest, right? And a clear value proposition, we touched on this a little earlier, that you need to be able to show that you've got a unique selling point. You need to be able to show that you're not just a solution that's looking for a problem, right? Why should people be excited about the product? Or if you already have customers, why are those customers excited about your product? You need to be able to show that and explain, and that will give them confidence to actually say yes. And then sometimes, particularly if you're dealing with supply chain, manufacturing, they may have issues to do with, concerns around supply chain. I think for the last 2 years or since post-COVID, the world has been going through supply chain disruptions, right? So the last thing that they want is to invest in a business that actually can't produce the goods that the market requires of them, and therefore lead to their investment underperforming. I don't know if there are any questions at this point in time or any comments. All right. So the last section, really the last set of slides that I have, is just some interesting statistics that came out beginning of this week on Monday, actually, from this company here, Dropbox DocSend. I suppose you've got a lot of these entrepreneurs who use this tool to do their slides, etc. And so they've been able to collect data around pre-seed fundraising and pull out of that data certain insights, which I thought would be helpful in this particular topic. I mean, first and foremost, a lot of this stats is really US centric. So I pulled out things that I thought even in a South Africa context will be able to use or apply, right? So the first 3 things about how to succeed in fundraising, they say that it all comes down to being succinct and being able to make an immediate impact, and also being able to show traction, right? And again, I will refer you to the presentation that Zoya did on communicating your message and being succinct, and also being able to having that emotional connection between your audience and what you're telling them, right? That is what will maintain their attention and allow you to tell your story in full and allow them to get the full picture of what it is that you're trying to do. Obviously, you need to make sure that you've got the right data backing that story up, right, for you to be convincing. This is the thing that I found quite interesting in the stats, was that, again, there's a lot more founders, right, sending pitch decks, and VCs or potential investors are overwhelmed to a certain extent. So their attention span when it comes to looking at these presentations or these decks is actually come down, right? If you're one of those that are in the successful cohort, the first time they see your deck, they'll spend about just over 2.5 minutes just flipping through your slides, just trying to get a sense of what it is. Then they'll come back again second time around and will spend slightly less in terms of digesting that story. But between the two periods, 2021 and 2022, the time they actually spend on a successful deck or on a deck whose company is able to raise money has actually come down 26%, right? If you are not successful in your fundraising, that time has actually come down almost 50%. So they'll look at your slide deck. Within 2 minutes, they've made their mind up. Maybe they'll come back second time around, and spend more or less the same time as the second look for the successful ones, but they've pretty much made their time, made up their mind in the first 2 minutes. So, which again talks to that first impression. If you're able to make a first impression, make that first impression count, right? Once you get through the door, make that first impression count. The other stat that I found quite interesting here, they're talking about, single individual founders versus multiple founder teams, right? And how successful are they? You can see that the single founder, the lone founder, they seem to raise quite a lot more money versus the others. And I would imagine this is because he needs more money to build up his core team before he can really start looking at a lot of other things. Whereas with these guys here, they already have a core team. They've already got somebody in there already who probably needs less financial security than he would need to provide. The loan founder would need to provide. But what I really wanted for you guys to get out of this is the number of meetings they had to go through before, for them to be successful in raising that amount of money. The loan founder had to do 50 meetings, right, for them to be able to raise that $870,000, right? And what this highlights to me, and is very important, is fundraising is not an overnight exercise, right? You need to give yourself the right amount of time, and for you to be able to do it well, and to do it in a relaxed manner. Once you do it when you are at the point where you need the money, you now start going around, you're feeling desperate, you're trying to save your company, and there's nothing that turns investors off as somebody who's desperate, right? You may think you're calm, cool, and collected, but that desperation kind of comes off on you, and it just is a put off. So give yourself time. 50 meetings, if you were to assume, 50 meetings for 50 days, that's like almost 2 months gone, pretty much 2 to 3 months gone, or 2 months of just everyday meetings, right? For you to be able to raise, a sizable amount of money. And if you think about it, this is happening in a market that's already deep, that has a lot of potential investors on the pre-seed side and seed side and VC side, compared to what we have here in South Africa. So I would say in South Africa, the amount of meetings you need to have to try and raise that money is a lot more, if you can actually find, the right investors too. And then the last one here is really about age, right? Age ain't nothing but a number. I think there was a song that says something to that effect, right? So it's never too late to start. If you're thinking of starting a business in your 30s, 40s, 50s, it's never too late to start. There will be people who will be there, willing to hear you out and willing to, support you, as long as you've got a solid story to tell. So with that, I say thank you for your time, and thank you for being part of this HIBA Women's Month celebration. Any questions? Any comments? Are we good on everybody's side?
Yes, I think we're good, Mandla. But thank you so much. I think, there's always so much to say around and us needing to understand a little bit more around investment. I think what I was gonna perhaps ask is, how important is it, for one to know the jargon? Do you think, because I think at times as a startup founder, your focus is so much on your product or your service or your business that in terms of the fundraising side, then, learning the jargon in terms of the investor language, how important is it to speak that way? Or you don't think it matters, or it matters to a certain degree?
Look, I would say the simpler you can communicate your message, the better. If you can speak the jargon, if there's any need for jargon, you're probably trying to complicate the issue for yourself, right? Where you can create, and I mean, I guess when you're trying to speak that jargon or trying to speak the lingo, you're trying to create that connection between you and the potential investor. I would say where the connection needs to happen is around the story that you're telling them, rather than trying to come up with jargon and talk about return on investor or on investment or return on capital. And again, particularly at early stage investing, it's too soon to be talking about things like return on capital and return on investment. What you want to be able to do is really, again, highlight the strength of your business, the strength of your idea, and also be able to highlight how you are managing for risk within that, within that business as well, to make sure that if they put money in, their investment is secure. I see there's a question here from Tuli, and says, any idea on how to get a list of active investors in Africa? I think you've got SAVCA, so South African Venture Capital Association would be able to give you a list of their members. If it's in Africa, you'll also be able to, there's AFCA, which is Africa Venture Capital Association. They'll probably also be able to give you a list of investors that are members of their, of their associations. Then you've got angel networks, right? Where you mostly individuals, high net worth individuals who tend to invest, particularly at the early stage. And there, you can get networks such as Josie Angels. I'm trying to remember what the SA one is, the country one, the South Africa, the one that covers the whole South Africa is, I forget the name, but we can try and get that to you. And yeah, again, it's probably through your networking that you'll also be able to get, some of these leads in terms of individuals that are actively investing in startups. I hope that answers your question, Julie.
Yeah,
it does. Yes, it does. Thank you very much. It's just that I'm currently fundraising, and I believe that it's better to start with the local investors. And I've had some lists available, but I think since COVID, also things have changed, because people that possibly have the money, like you mentioned, Diesel Angels, I believe currently they don't have the funds. It's also just trying to get the ones that are active, because things have changed since the pandemic.
What?
Sorry, not just, yes. Diesel Angels, I think they used to, but currently they are also trying to raise funds. So I'm not sure which ones are active.
Right. Okay. Yeah. Well, we'll look on our side and see if there's any one within our network. But what business do you do, if you don't mind my asking?
Not a problem. I can answer it. It's a marketplace for beauty and wellness. And I've been part of the Founder Institute and just started fundraising with a funding lab. And the process requires us to get, so I understand that after getting the list of investors, I need to also get connectors, which is where probably you guys will come in, connectors and advisors to that, but I still need to build the list of the investors upfront and then try and find people that can then do the intros.
Okay, yeah. Yeah, I guess, look, we can carry on that conversation, I guess, offline, and we'll see how we can help you. Any other question or comment? All right. I think that's it. Yolisa, anything else?
No. I think I'm good on my side. Doesn't look like we've got any questions on the floor.
Okay. Thank you very much. Thank you for your time and all the best.
Yes, thank you so much, Mandla. I think you can remove the presentation so that we can just thank you properly. You can stop sharing. Thank you so much. We really appreciate that you could celebrate Women's Month with us and be an ally by, conducting this this masterclass. We really appreciate it, and I think it will be really helpful. Even just for repurposing even in the future. So we thank you so much for your time, and from the HYBA team, thanks as well to Sandra and Bonnie and for their support. And
thank you all.
Okay. Any last comments from you, Mandla?
No, I was going to say thank you very much. Sandra, Bonnie, the rest of the HYBA team. It's been a pleasure being part of this, being an ally.
We thank you so much. And then I just want to share this screen just to let people know of our next session, which is happening at 3 o'clock. And for any other sessions as well, or the schedule for the rest of the month, you can get the tickets from Quicket. And we also have, and you can also use the QR code to find out the schedule for the rest of the month. Otherwise, thank you so much. We really appreciate for everyone who's joined us this afternoon. Oh, sorry.
Cheers.
Cheers. Sandra, you can stop recording.